Hello and welcome back to The Note. The big event for this week, as far as the markets are concerned, is going to be the meeting of the European Central Bank on Thursday. There's great excitement over it. It's regarded as more or less a done deal that we'll be getting a cut in interest rates, plus quite a lot more. But exactly what could the ECB do, and has the market got ahead of itself? With me now to answer some of these questions and maybe some more is the head of global macro credit research for RBS, Alberto Gallo. Alberto, thank you very much for joining me once more.
Thank you.
Let's start by taking a look at lending rates for small and medium-sized companies. And you can see that while, if you look at sovereign bond yields, the crisis is more or less over, the gap that remains when it comes to banks lending to small companies is as acute as it's ever been. What's happening here?
So the fragmentation has been eliminated in the financial markets, but as you can see in the real economy, periphery firms are still funding at around twice as much the cost compared to core firms. So that means that periphery SMEs are facing an extra hurdle compared to the competition in core countries. And periphery SMEs are responsible for 80 to 90% of job creation.
Okay, so this is a really central macroeconomic problem for those countries on the periphery. Let's just take a look at how much of a problem finance is for SMEs in these different countries. And it seems even in places like Greece and Spain, where the state of the economy must be a problem, it still ranks very high.
And the key point is that even if you buy sovereign bonds, if you lower the yield of BTPs or Spanish bonds, it does not necessarily translate into the recovery of the credit mechanism. So the transmission mechanism of monetary policy remains impaired. There's a lot more SMEs that are suffering in the periphery compared to the ones in core.
Okay, so a cut in the target interest rate will have more or less no effect on this problem. What exactly will the ECB be able to do you think, to deal with it?
So there are some short-term measures. You mentioned an interest rate cut. We expect 15 basis points in all the refinancing rates and the deposit rate. There's a discussion around a 40 billion potential LTRO conditional to lending, so banks could borrow that money only for lending to SMEs, but banks still suffer from lack of capital, so I don't think that's going to be a game changer. So all these short-term liquidity measures could effectively lower the euro. They could boost some confidence into yields and lower further the spread of periphery bonds, but they won't really reactivate lending. So the real bazooka is still work in progress, and I think it's what we would call credit easing, not really quantitative easing.
Okay, now let's talk a bit further about what credit easing might be. If we take a look at the asset-backed securities market, which in the US is almost back to credit bubble highs, we've got a very different picture here in Europe. This is what we really need to take a bazooka to, as I understand it.
That's right. In the US, we had TALF, we had mechanisms aimed at the revitalization of the mortgage market there. But it was much easier because you already had a very well-developed asset-backed and mortgage market, as big as the treasury market in the US. In Europe, the asset-backed market, especially the one for SMEs, is less than 100 billion large. There's been very little issuance during the crisis. And
which means that the banks have to keep this all on their balance sheets for the time being when they have problems doing that.
Correct, and that's why we have bigger banks and more problems in Europe. Now, what the ECB is trying to do, and they published a joint paper with the Bank of England last Friday, is to revitalize this market, to make ABS, asset-backed securities, more safer and also more liquid going forward. So they've created some guidelines for an eligible instrument. This is something where national regulators have to move. And to also favor an asset-backed security, so that at some point, but it will be next year, at some point the ECB could be able to support this market.
Okay, Alberto, thank you very much indeed. That's, I think, a very interesting look at exactly what the problems facing the ECB are. I suppose, from the point of view of anybody trying to trade the market at the moment, the point is that the bazooka is coming along, but it isn't necessarily coming along this week. It's more like next year. Expectations may be a little too high.